Alrighty, so going to be doing a trade recap of a long position that I took on euro dollar on the 9th of May 2022 during the London session. Now, I think this is a pretty good example of where market conditions are a little bit trickier to trade. They're a bit more complex because, as you'll see in a minute, price was stuck within a pretty sort of big choppy sideways range. So in short, this is basically a good example of the types of setups in which we should wait for when market conditions are not necessarily as conducive as what they can maybe be when we get those nice perfect utopian like impulses and pullbacks to value, etc. So yeah, let's dive into it without further ado and wasting more time, and we'll go through it. So weekly chart, we can obviously see with the recent price action, we're selling off pretty aggressively. If we kind of zoom out to try and see the overall bigger picture, yes, it's not as super relevant when the majority of us, if you trade like me, right, we're going to be entering on the M1, trying to catch 20 to 50 pips, right, if that. However, I think, at least me personally, I find value in knowing where we are within higher time frames, because you can start to understand why potentially price is giving us current conditions. So the point I'm trying to make there is, if, for instance, during the week, you were just stuck in this choppy range and you're wondering why, structure isn't really committing to itself, it's just moving sideways. Well, the reason why is usually because the higher time frames have hit a significant area of value, and they're potentially starting to accumulate those orders as we come into these extreme levels of demand for a potential high time frame pullback, or at least to absorb that before it potentially wants to continue the overall bullish trend. So like I was saying, we can see that we were selling off pretty aggressively on the weekly chart, but we were coming into this extreme weekly wick here, so this extreme demand zone that had swept liquidity. So overall, without even going on up to the monthly chart, right, we can see we've had this big impulse down, essentially one big corrective pullback, and now potentially it's time to take out this week low. Why is it a week low? Well, it's obviously failed to break any swing structure up here. So as price is coming into this wick, we can kind of expect, like I was saying, either we're going to get a bit of a pullback, or it's just going to pause for a little while whilst it absorbs that demand before eventually pushing through. So that's the weekly chart. If we take a look at the daily chart, pretty much the same thing in terms of, if we scroll left, right, we know there'll be some potential demand left within this wick, even though if we actually look at this extreme daily candle, right, the pivot has actually been mitigated, right? So if we take the actual candle zone, okay, not quite to the EQ, but there's still a decent amount of orders that have been left, but we know there can be some orders within here, especially within the wick, just to hold price a little bit, but we wouldn't necessarily expect like a massive pullback from a zone like that, especially when the distal of the pivot zone has already led to a pretty decent move, and it's a pretty old zone, right? So we do have to wonder how many orders are going to be left within that area, right? That's why I prefer to focus more, or at least way more importance on the recent price action. But in terms of structure, right, daily chart, we can start to map out our swing structure. Just do this pretty quickly. So, a question I get a lot is, when you first come to a blank chart, how do you know you've got your swing highs and your swing lows in the right or wrong place? Well, easiest way to do that generally is when you get a nice big impulse, wherever that most recent one was, it's pretty likely you're not going to get it wrong at that point, right? It's pretty likely that was the last swing high, this is the swing low, and then you can kind of work your way to current price action from there. Here we can see that price failed to close, if I zoom in a little bit, above the swing high. So there's never was a bullish break of structure, which means the overall bearish market continued here in the daily chart, where we then got a break and close below the daily low there. We then had another daily pullback, and then obviously continued the overall bearish trend before finally getting a close here. Now, this pullback here, some of you may mark that as swing structure. That's absolutely cool. Whether you're using pip rules or it looks significant to you, that's fine. For me personally, I'm kind of just focusing on the larger swings, and for me, this is one bearish daily leg, and this is just a small pause in price action, right? For me, that's more of a 4-hour pullback, okay? So that means we are currently within this daily swing high, and then potentially we're pulling back from this daily low here. Now, if you are potentially hypothesizing that we're going to be getting a daily pullback, right? If I get the right range, right? So that would be the EQ up here. So we would expect, if we're going to get that pullback, for price to ideally pull back up to premium levels of supply, but of course it does not have to do that, especially when momentum is strong. So let's kind of act as if I'm coming to my desk pre-London session on the Monday morning, as that's where I've rewound price to, and this is kind of what I'd be saying. So we've had a little bit of a small pullback. We've reacted to this fractal supply, this buy to sell wick supply, right? So it's nothing that major on the daily chart, but we can see it nonetheless, and potentially we may have a deeper pullback. But because the momentum's so strong, we have to be aware that this week low could go any time, okay? But if you want to play longs, right, if you want to play those counter daily trend longs, risk reward is on your side, right? If you're trying to get in at the very, very start of the pullback, rather than trying to like push longs when you're up here and we're already up into premium daily supply, okay? So trading counter to daily trend is obviously never ideal, but doing it down here, obviously if you have solid lower time frame confirmations, is when risk reward, like I said, is going to be mainly on your side. So really, we don't have to dig too much in the weekly and the daily. Probably could have done that analysis in about 20 seconds, but it's, I think, useful to go through it nonetheless. But yeah, as we get to the 4 hour and M15, this is really where you kind of dive into a lot more into it and pay a lot more attention to detail. So for me, this was the last break of structure here on the 4 hour chart. That was that last swing of price action, which was that pause we were just talking about on the daily chart. And then we've had just one straight leg, and now we are having that swing pullback. So let me put on my pretty little circles to mark out the swing high and the swing low. Cool. Okay, so I could look left and find some zones, but ultimately it doesn't massively matter, right? We're going to just concentrate mainly on the most recent price action, as to be honest, that is the most important. So we initially came down, and then we took this 4 hour high here, right? So we can see that was the change of character. All of those candles broke the prior candles low, and then we took that high. So that's a pretty decent signal that we now potentially may be starting that pullback. So this would be the price action that I've got coming into my desk sort of just pre-London session. So I think I've loaded it to around sort of 6 a.m. BST, and this is what I'd be seeing. So if we keep things super simple, what do we have? We have one big impulsive down, and now we've just got that complex pullback, but ultimately we're just trading sideways within this range, right? So it's a bit complex. There's no real clear hard time frame intention. So whenever price is like this, what you can do is kind of just box off from the low to the high of that range. And really, you kind of want to stay away from this red line. You want to stay away from the middle of this line, because this is where the lowest probability setups are going to be. This is where everyone gets shopped around, and what you want to try to be doing is buying in sort of the bottom 25 to 30% of the range and selling in the sort of top 25 to 30% of the range, because that's just going to be the best area of value. And do your best to kind of stay out of this level here, once it's obvious that we're not really going anywhere as things stand. But if we want to try and be a little bit clever, right, and we want to dig into price action a little bit more, let's zoom into the range and let's see what happens. So we've had a bit of a pullback. Obviously, on the daily chart, we got nowhere near the EQ, so we got nowhere near the premium of the daily range, but let's look at the 4 hour range. Are we anywhere near the EQ there? Not so much, okay? We have rejected this 4 hour level of supply here, right? Nice clean level of supply, which then led to a bearish change of character, because we came up, we pulled back, that inside bar fell to break that prior candle's high. The next candle then did, which then made this as that little low there, and we've now taken that low. So that means we've pulled back to a level of 4 hour supply. Yes, it's not in the premium, but again, price does not have to, especially when there's strong momentum. And we have now continued to the downside. Okay, so potentially now that 4 hour pullback is over, and now we're ready to take out that weak 4 hour low. So if we just get rid of these drawings, they always move stuff around trying to view. There's the redo one, and there's the range tool. Okay, cool. So we've pulled back up to supply. We've had a bearish change of character, but also, we had a pretty decent impulsive move down. So that looked pretty good. But then what happened? So this would be the Friday of the prior week. We obviously tried, we've made a very, very good attempt at coming down to take out these lows. But ultimately, what's happened, if you look at the nature of price action, it's ended up sweeping the liquidity below these lows here, right? And then you can see what happened is it's failed to close below these lows. It's obviously failed to close below the swing low, and then retraced aggressively. So that's a pretty good sign of what we would call a sweep, where your price fails to close below those lows, essentially grabs those orders and then aggressively traces to the upside, giving us a bullish change of character. Okay, why is that a bullish change of character? Because we got the initial bearish one here. All of these candles break the prior candles low. Then we get a pullback here, right? We come down, which then makes this a high, right? That little internal high, and then we get a bullish change of character. Now, although that is a bullish change of character and it is a bullish signal, you don't want to get too caught up in changes of character. So the ones that kind of weigh a lot of significance are ones like this, where we've had a big impulsive move, we're trying to anticipate potentially when we can expect that pullback, and then we get that initial 4-hour change of character, especially if we're coming off that, that daily wick demand, right? That's the kind of change of character that to me holds a lot of weight. Likewise, we then have that complex pullback, we come up to a very clear level of supply, and then we have a bearish change of character here. Again, to me, that's a pretty decent piece of information, right? But when we start to then come down here, we're struggling to break the lows, and then we're clearly moving sideways now. This is where changes of character, yes, I'll mark them out and I'll be aware of them, but they don't mean as much to me. It's less important information because changes of character are very, very aggressive, obviously. So when we're ranging, we're not really going anywhere and there's no clear intention. We can expect changes of character to happen frequently, and they don't weigh as much importance. So hopefully that kind of makes sense of you'll gain with experience kind of when to pay attention to them as much and when not to as much. But the real point I want to drive here, even though I'm actually being probably a little bit over the top and pedantic with my analysis, but this is the way I viewed it at the time and probably will add confluence to the long that we're about to get to in a minute, is that we'd pull back to supply. Supply's job is to what? It's to go on and form that lower low. It gave a very, very good attempt at doing that, right? Big impulsive movement down, and it clearly failed to, it didn't even wick break it, let alone break and close below it. We then swept the liquidity below these equal lows here, aggressively retraced to the upside, and then gave us that bullish change of character. So then coming into Monday, we have that sweep, we have that bullish chalk, we have a failed attempt at taking out the swing low. And technically this level here is a level of 4-hour demand, right? Because this led to that bullish change of character, right? So that is also a level of 4-hour demand. So what I was hypothesizing is that although the daily and the 4-hour are heavily, heavily bearish, and I'm expecting eventually this weekly low to go, the confluence for taking longs against the 4-hour and the daily is that one, we have 4-hour supply, but the main one being we can target this as a potential weak sort of, that larger internal high. Why? Because it's tried to do its job, it's tried to make a low, and it's failed to do so. So potentially at this point now, we can look for longs within here. Yes, slightly more aggressive because it's heavily counter trend, but to try and target this high going, and potentially we're going to get that deeper pullback into premium levels of supply, or even this nearer supply here. So this is what I was saying when we were looking at the daily chart nearer the start, is that if you're going to play those kind of, counter trends, to like say counter 4-hour and counter daily trend trades, it's best to do it at the start of the move, right? Whereas rather than if we'd already had that big pullback up to the daily and 4-hour premium, and then you're looking to try getting long here, yes, we can do it, but it's a lot, the risk reward is not on your side compared to doing it down here, because the pullback's already completed its objective, it's filled that premium supply, so it's a lot more likely we're going to get that move down here rather than potentially we're going to catch at the start of the move. Okay, so that's basically my sort of 4-hour thesis and trade analysis coming to the start of the week. Yes, maybe it's a bit over the top, and maybe the simplest thing, more simple way you can view it is we're very oversold. We've had a bullish change of character. We can expect a bit more of a hard time frame pullback. Yes, we're moving sideways, in this larger range if I kind of mark it out. So let's just say we're in a ranging condition. We want to buy near the bottom, sell near the top, and we can just be a bit more aggressive with our management, right? Get in here, take most of our profits off here, sell from here, take a decent amount of our profits off here, but we can still hold on to a bit of volume because overall the sell is with the swing trend, and potentially we're going to take out that low. Okay, so it depends on how kind of clever you want to get with your analysis or how simple you want to keep it. And I guess if I was going to advise you one way to do it, it'd be keep it simple. We're in a ranging condition, buy near the bottom, sell near the top, but don't swing for the fences with your management. Okay, so hopefully that kind of clears it up a little bit. Okay, so again, to round it up, thesis coming into Monday, we're at the bottom of the range, we're in 4-hour demand, we've drived and attempted to take out the low and failed to do so, so now potentially we can try and target this week high. Cool, let's drop down to the 15-minute and see what's going on down here. So we know we're in 4-hour demand. I'm just going to get rid of the box to try and keep it a little bit more clean. So when you initially look at this, especially if you had a blank chart, obviously if you've been following this for weeks, you'd have your swing structure mapped. But the first time you come to this, it can be a little bit confusing potentially to make sure you've definitely got your M15 swing structure to correct. So this is what I was saying earlier. What do? Go to kind of where you can last see a very clear trending impulsive environment, and then it's a lot easier to make sure that you've probably got your swing structure in the correct place. So if we go back to here, right, we've obviously got a clear impulsive move down, nice pullback, and another impulsive move down. So that for me, I would have a pretty strong confidence that I've got M15 swing structure in the right place. So for me, that's just a small pause, right? If we look at the relative price action, that is one drive to the downside, okay? Now we pull back. We obviously fail to break that swing high, so we stay bearish, and then we have another drive to the downside. But we fail to close below that low. Okay, so at this point, this would be our M15 swing structure, right? And then this would be the M15 low. So what we are waiting for is what? We're either waiting for a candle to close below this low or above that high there. This is new in these boxes. I haven't seen this before. Cool. Anyway, so as we can see, I'm trying to do this a little bit quicker now. We can see we then end up switching bullish here as we get a break and close above. So when we get that break and close above, where is our swing low? It is the lowest point that broke the swing high after the swing high formed. So if you're confused, what can you do? You can draw from the left to the right of where it broke and then drag it down. And the new swing low is the lowest point, which is not here, it's now here. So this becomes your new swing low. Okay, cool. So now the swing range at this point, it's a bit more complex. It's going to be between these two highs. So from this low, right, to this high. So you can drag a box. What breaks and closes first, the high or the low? We drag it across, we can see the high breaks first. So we get another bullish break of structure over here. Get a little bit more clearer. Cool. So now when we get this bullish break of structure here, where is the swing low? It's the lowest point in this gray box. Actually, sorry. It should be after this, right? So it's the lowest point from when this high is broken after this high was formed, and we can see it's down here. So this becomes our new swing low. Get rid of that box. So then we're trading in that big range. And then we can see up here, so this depends again on whether you're using discretion or if you have pip rules. We can measure this, right? It's not the cleanest of pullbacks. Some people won't classify this, but it was over 30 pips. So I personally classified it as a swing pullback. Quickly put on circles so we can keep track of it, right? And then this one here, again, I used a bit of discretion because it wasn't quite 30 pips. It was a bit of a smaller one. But the reason why I kind of like this as a pullback, again, it's fine if you didn't mark it. If you're keeping strict to that 30 pip rule that we're using at the moment, that's absolutely fine, stick to that. But because we came into this level of 4-hour supply, and it makes sense that the M15 switched bullish to do what? To facilitate that pullback to 4-hour supply, right? Now we then switch bearish after mitigating that supply. That makes a lot of sense to me to then map structure that way, right? That we then have a bearish break of structure. And now we can now look to target that 4-hour swing low. So that was your swing high, right? Once you got that break of structure. And then these were all quite small pullbacks. So I viewed that as one movement down. And then it wasn't until, let's see here. Yeah, so now we have a big pullback here, right? So once we get that sizable pullback, this would become my swing low. And then we get that break of structure there, okay? So again, we come into supply, we get a bearish break of structure. I didn't classify that as a swing pullback as it was quite small at that point. Again, likewise, just a pause. Then we got a sizable pullback. Obviously failed to take out this high, so we continued the M15 bearish swing trend. And then we closed below that low, which then meant we had this as our swing high here. And then price came up and took out this swing high over here. So then we switched bullish, okay? Giving us our new swing low down here. This is the lowest point that took out this high after this high was printed, right? Nice and obvious one there. And obviously we've pulled back here to be this candle here. So again, some of you, you'd be looking at being very, very mechanical and going, okay, that's more than 30 pips. Why isn't that swing structure? Well, this is why with the current volatility that we are seeing since end of February, it's not just that volatility has increased, but also it's varying a lot day to day and week to week. So this is why at the moment I'm personally kind of just using discretion. I'm looking to, what looks like, clear swing structure with sharp moves away and what makes sense to me. And for me, this is one movement in price, one swing leg, okay? Right, I know that took a bit of time, but I think it is worth going through it for those, right, who are not maybe as comfortable with swing structure. So I appreciate your patience for those guys who are a bit more advanced. But anyway, so coming into Monday, again, let's go up to the 4 hour just to give you a super quick idea of where we're at. We're heavily sold off. We're moving sideways. So ultimately we're in a range, but I was trying to get a little bit tricky with my analysis and basically saying that this high failed to take out this low. So potentially it's weak. We've had that nice sweep. We've had a bullish change of character. We've come back into this 4 hour level of demand that caused that bullish change of character. The M15 has now switched bullish. So we can look for longs within here, within the bottom extreme of this 4 hour range to potentially anticipate at least this high is going to go, and potentially we may get that deeper daily and 4 hour pullback. Okay. But even with all that said, I know the higher time frames are overall bearish. I know ultimately we're trading sideways in a range. So whenever I get in trades like this, I'm still personally quite aggressive with my management, and I get out the majority of my volume around sort of 10, 15 hour, or at least the middle of the range. Okay, some of you don't do that. I know some of you like to hold a lot more volume for longer, and that's fine. But yeah, me personally, I have to do what works best for me over the long term. But we'll talk about that a bit more as we get into the trade. So 15M, we have our structure correct. We know that this is our weak swing high. This, in theory, should be a strong and protected low, right? And we've now pulled back, went into the discount, right, of this level, right? We're obviously well below into the discount of this range. So now we can look for buys to, you know, target this weak high and potentially that week 4 hour internal high. Okay, so that's basically the simple thesis of what is going on. Whilst also understanding we've had a nice, strong, aggressive sweep of the liquidity below these lows, coming off this extreme unmitigated wick demand there. Well, it wasn't mitigated, right? Obviously it is now. If you draw it like that, okay, so we're there with remaining orders. Okay, so it's actually within here. So not the cleanest of zones. You know, you can argue it's had double mitigations here. So yeah, not a big fan of that, but ultimately the market's shown us that it has rejected it. So yeah, you know, I wouldn't overthink it too much more than that. Cool. So where do we have demand zones? Well, we have this extreme candle. Okay, but this for me, again, I would say the distal has clearly been mitigated, because when it was created, we had the movement up, we had the pull back into it, and then we had that continuation. So yes, there can still be orders within here, and that's why some people use the 50% rule, that they say the majority of the zone is not fully mitigated until price pulls all the back in. But for me personally, when I map out like this, and we've had a decent touch into it and a pretty big move away, I'm happy to just mark it like that and basically look at it as if it's mitigated. So then we can look at the next candle. We have this inside bar here, which price is currently in. That led to a break of structure. But what also did it do? It flipped this level here, right? Because price came into that buy to sell candle, reacted, right, validating that there was supply in that level, clearly failed to put in a lower low, and then the demand stepped in to take out that level there. Okay, so you could take the whole range of that reaction, but obviously we can refine it to that single pivot candle. Right, so this is where I would be. So this is about 6:15, so about 45 minutes before I'm really looking to trade. We've now pulled back down into our extreme demand. I'm looking for longs, so it's at a perfect area of value. Since the weekly market has opened, what have we been doing? We've just been selling off, right? So the recent order flow is clearly bearish, putting very correctively back down in towards our zone, which is nice. So now what we're essentially hoping is we're going to get a nice clean move like that. So as price comes into our M15 zone, what do we have to look for and what can we do? Well, there's a few ways. It's obviously going to depend on your plan. Let's keep things simple, and this is what we say in the beginner trading plan, is only focus on pro M15 trend trades, right? And once price is in your discounted demand zone, we've kept the plan simple, that all you have to do is look for an M1 shock, right? But if you want to increase your strike rate, this is where you can look for things like a bullish M15 change of character, especially when you have such a large zone. We do not have to be first into the market, right? Especially when price is just selling off and selling off. We can wait for price to give us that bullish shock, right, on the M15 to, you know, catch us potentially trying to stop a falling knife, just if you want to boost your strike rate a little bit more. Now, if you actually really zoom into price action, we have actually already had a bullish change of character, because price comes down, then all of these candles break the prior candles low. This one obviously fails to do so, so we pull back, we come down, and then what? We break that high there. So we've had a bullish change of character. So this makes it more than valid, right, if it's within session hours, etc., to start to look for longs from essentially this M15 confirmation entry, because we've come into M15 demand, we've had a bullish change of character, and now you can look for longs within here, whether that literally just be entering on the M15 zone itself or looking for M1 trades within here. Okay, there's absolutely nothing wrong with that, but a couple of things. One is, you know, I personally prefer to kind of wait until at least Frankfurt started to open, so we have volume on our side. But the main one would be not only just waiting for an M15 change of character, because obviously it can be, you know, it's very, very aggressive, and sometimes, you know, it can give you false signals. But two, supply has clearly been in control since the market opened this week. So why don't we wait for supply to first fail? And, you know, so demand is looking to start to take control. In other words, let's first wait for M15 order flow to shift in our favor. So what does that mean? Well, if you look at all of these, you know, supply ranges, right, this being the most recent one, okay, you can just see we're selling off, we have a little bit of a pullback, we're selling off, we've had a pullback into that M15 supply range, right? You can even refine it to the actual, inside bar. But really what you want to see is that whole range fail, right? That last pullback, because the reason why we've had this very sort of, tiny little chalk that you can barely see, it's not really that significant. All it really means it was just that just occurred, so price could pull back in to mitigate the supply and continue to the downside. Now, does that mean you can't trade in here? Of course not. But it's just a sign, especially when it's like, Frankfurt or London volume hasn't even kicked in, that just wait for both the chalk and wait for supply to fail. And this is what you'll see in my markups I say a lot. Ideally, we would like to see both a bullish chalk and supply fail to then look for longs, just to give us that extra piece of confirmation. So that's why, as we see now, we roll up into Frankfurt, right? Price shops around, building those equal lows, and then we push down through. And supply has continued to be in control. Now, what has also happened, if we drag this across, as you can see, price has just traded through the zone. Now, for me, I keep it 100% mechanical, and if price trades through the zone by a micro pip, for me, the zone is now fully invalidated, because if the zone is going to hold, it should, in theory, have enough orders within it to contain price. So at this point, I'm deleting the zone, right? But what we can see with the candle, you see how it's aggressively moved down and aggressively moved up, and it'll be even clearer on like the M1 chart, especially when you see it form live, it's basically buyers are stepping in. We've had a sweep of this structural low, okay? So it's the first sign that potentially bulls are starting to step in, especially after liquidating these equal lows here. Right? But that's not enough because for me to start to want to look for longs, because we also now essentially have this supply range, right? So from the low to the high, right? This sort of last pullback again. So this is a movement down. That's your supply. Again, we've had this pullback here. That's your supply. So what I would like to see now is both what I was looking for here, a bullish chalk, and we want to see the nearest supply range fail, so order flow is on our side. So where would the bullish chalk would be? Well, we've had the movement down, we've had the pullback up, and then all of these candles break the prior candles low. So this would be your bullish change of character here. Cool, okay, so now I'm pretty much just sitting on my hands. I don't want to sell from here because it's counter M15 trend, we're at the very, very extreme. So I'm just being patient, and I want to see the chalk, and I want to see the supply fail. So let's fast forward it a bit. Okay, boom, right? So that's the kind of intentions we want to see. Yes, this supply zone has technically failed, but we know there can be some orders left within this demand zone here. We've also swept, see how this is a pullback? So that's a structural low. We know there's liquidity behind every structural low and high in the market, but it's also the characteristics in the way that price reacts to breaking that low, right? It's come down and it's aggressively swept to the upside, showing you that overwhelming imbalance between supply and demand, showing you that potentially big money has stepped into the market. We also have our bullish change of character, which means the internal structure has now shifted in our favor if we're looking for longs, and our most recent supply range has now clearly failed, right? Nice big close above it as well. Big spike through, right? So in my head now, I have so much more confidence looking for longs to play that potential move, right? In order to try and target this week M15 high with the ultimate potential, right? That we might take out that week 4-hour internal high to get that larger daily pullback. But regardless of all of these nice big targets, right? Even if you're just looking for, quote unquote, a quick 5-hour, 10-hour move, this is perfect. Well, not perfect, but this is great in terms of the M15. The reason why I say it's not perfect is because obviously it's heavily counter the 4-hour and a daily trend. But all else things considered, from intraday perspective, just looking at the M15, it doesn't get much better than this. We've had a nice corrective pullback, right? Obviously, clearly bearish order flow. It would have been nice, obviously, if this zone held. It just failed, but not by much. We've swept that level. We had nice perfect equals, so the early longs have now been liquidated, right? We've trapped in early sellers as well. Boom, nice aggressive retrace. That's the type of thing I like to see, especially session timing as well. So this is around 8 a.m. So this is bang on London Open now. Perfect. Supply has failed, order flows in our side, bullish change of character. Cool, so where can we look to get in long? Well, really we now essentially have this large demand range, but I'm going to refine it to the single pivot candle, which is what I advise the majority of you do. So now, of course, if you just want to keep it nice and simple, do not turn your nose up at M15 entries. You can literally take the distal there, or of course enter on about 25% or the EQ, or however you want to do it. And there's a nice simple trade, right? With very, very decent. This is why I say don't turn your nose up at it, right? Decent 10R there, and we haven't even started to target supply or up to the extreme, right? And you haven't even had to mess around on AM1, etc., and it can be a lot less stressful. So at this point, now I've seen everything basically I want to see on the M15. I would be setting my alerts here, but because it's London Open, I'm going to be looking at the charts anyway. So this is where we can now jump down to the M1. But the point before we do that, I really want to drive home here. If you're still awake and you're still watching, appreciate this was a bit longer than I had intended to do, but I think it's worth, really taking this slowly. But yeah, this is sort of what I would say is why I try to say to a lot of you is don't even be looking on the M1 until you've seen everything you want to see on the M15. And this is what I mean by this. Now I have, and I know that as soon as price comes down into this blue box, I'm going to want to look to get involved on the M1, right? That's not to say, especially you guys who are more advanced experience, you can't look for those early positions within here, right? We've had a bit of a shock. We were reacting from demand. Yes, you can look for longs within here to anticipate that. And I'll do that as well sometimes. But if you want that kind of higher strike rate, this is the sort of price action we want to see. We want to wait for order flow, especially when you've got this big, large range, right? We don't have to be first in. We're clearly just selling off. Wait for the market to show its hand. Supply's now failed, demand's in control, structure's shifted on our side. We've had a clear liquidation here. We've swept that low as well. Boom, okay. That there's like not zero doubt, but if I take a few losses within here, I'm not going to be, angry at myself because I know this is the type of area where I'm willing to risk my capital because I know 8 times out of 10, this is going to play out pretty well. Okay, cool. I think I've driven that point home. So, M1 chart. We've seen everything we want to see. Now, basically, it's for me, the way I kind of view it, the way I trade is I want to look for an M1 entry within this blue box. As soon as price comes back in, that's where I want to get involved. So what we can start to do is mark out M1 POIs within here, just to help be a little bit more refined and give us more confidence when price comes into here, that if price is, if it comes in, and then it starts to give us a bullish chalk or our entry model, and we look left and we can see we've mitigated a nice unmitigated M1 level. It just helps to give you even more confidence and, in theory, a higher strike rate. So let's go from the very bottom and work our way up. So we have, this extreme zone within here, right? This was the next candle that was actually engulfed. We can drag that across and we can see that was already mitigated. Okay, cool. So I wouldn't really be looking to trade from this zone. So the next unmitigated level is this level here. And for me personally, this is what I would then refer to as the extreme. For me personally, I kind of call the extreme as the current, well, if it's demand zone, I would say it's the lowest, so at the best value unmitigated zone. So for me, this would currently be the extreme unmitigated M1 zone, right? Which has clearly led to, a break of structure, change of character, etc., right? We can see the actual true M1 chock is on this inside bar here. So I know some of you, if you want that super aggressive entry, right, after that sweep, see that big V shape, you could have got in on here. For me personally, a bit too aggressive, like I said, for all the reasons. I want the M15 chock, I want this supply fail, and also the actual M15 demand had failed right at that point when it just traded through the low. But yeah, that is a valid entry, just a lot more aggressive. So let's concentrate on the high probability stuff for now. So this would be the most ideal zone for me, and this is what I was looking at. However, as we can see, it's quite a large zone for an M1 zone. It's a 5 pip zone. So of course, like if you use a fixed 2 pip stop or however you want to trade, you can enter directly on the zone. For me, it was a little bit big. So what I was waiting for is for price at this point now to work its way down in here and give us our textbook entry model, ideally, right? M1 liquidation, M15 mitigation, obviously refined M1 zone as well would be ideal, and then get that nice V-shape, chock and flip, etc. Or if the flip doesn't sweep right, you can then enter on the extreme. Right? You guys know the general model. So that's what I was looking for. I was essentially looking for an M1 confirmation entry from this level just because it was quite big. The other level that we do have, right, is this one, which is pretty much just about in the zone here. Now, for me, it is a flip zone. It didn't quite reach this single refined candle here, but I can read between the lines that this reacted from this supplies level and pushed up, and I would personally classify that as a sweep zone. But because this was quite a large move, we had quite a large zone here, and we've got an unmitigated level below, so this could very easily become inducement, right, this low here for this zone here. Especially as there's no inducement in the leg, because you can see all of these candles broke the prior candle's high, so it's all one straight move from a structural perspective. It means there's no inducement, i.e. there was no pullback, so there's no liquidity here to be taken for this zone. So it just reduces the probability a little bit. But to be honest, I don't personally overthink that too much. For me personally, liquidity doesn't play a massive role in terms of what I just spoke about there. It's more for me that there's a big unmitigated zone below here. I'd rather just let price come in and show me where it wants to react from. Okay, so if you set a limit order on here, whatever, that's completely valid, but I'm just kind of explaining why, my viewpoint on that. So just patiently waiting now for price to come in and give me my CE. So we can see price has smashed through that straight away. So simply just delete that. We can now see that price may be sweeping liquidity below that low. Now, price is here. Okay, so like I said, I'm waiting for an M1 confirmation entry. So what's the bare minimum I need? I need an M1 change of character, right? I need a chock for me to want to look to get involved. So at this point, that chock high is going to be all the way up here, because that was the last candle to fail to break the prior candle's low, right? We obviously had the break of this M1 low here, right? Because that was one straight movement up, and then we came down and taken out the low. So where's the nearest candle? Where's that internal high at the point? It's this point here, right? Because essentially we had the down movement and then down, right? So that's your M1 high. So that's the high that needs to go for me to get my M1 change of character. So again, just sitting on my hands and literally just chilling until we get that. There's another straight line until we get that M1 chock. Just going to rein this in a little bit to help with my chart OCD. Cool. So again, just waiting for that M1 change of character. Okay, big movement away. So go, all right, maybe I've missed a move. When price comes very near a pivot zone and moves away like that, I go, okay, we've probably rejected the range, right? Like this, because it doesn't have to come in. You know, an M1 candle was very, very refined. You have to remember that. So at this point, I go, okay, we've probably rejected the range. Let's see what happened next. And also what I forgot to mention as well is when you see a zone like that, always look to the left and say, you know, what did we pull back from? What are we rejecting? What are we reacting from? And we can see that we were reacting from this M1 buy to sell supply here. Right, so it's a flip zone as well, which obviously adds confidence to it because price came in, we got a bullish change of character, we reacted to this level of supply, we obviously failed to put in a lower low, and then demand stepped in to break and close above that reaction here. So now this whole range from the top of the reaction to the base of the reaction, right, that red box is your flip zone. We just refined it to the single candle, get the right box, right? But as price moves away, you can look left, react, understand what's happened, we've reacted from the range, okay? Cool. So at this point for me, there's no entry, you know, and I'm happy with that because I don't want to personally enter with that big of a stop on the M1 anyway, right? So let's just see what happens next. So we're coming to supply. Do we have a change of character? Yes. Now we have a bullish change of character and a clear break and close above that M1 swing high, which essentially is an M1 boss. Okay, so that's showing pretty good intentions. So don't get frustrated, don't get pissed off, stay focused, and look, right, where's the next place to enter from? Follow the order flow, follow the mitigations, right? We've had one mitigation here, and now we've had a second mitigation here. Yes, I'm aware that it hasn't quite hit the pivot, so price could come back for that. But generally, especially when you know the range is just a little bit bigger, a few pips, I'm going to follow the money, I'm going to follow the order flow. So at this point here, I then drew on this clear M1 zone, right? And dragged this across. Now again, this is a pretty straight move. There's no inducement in the leg, i.e. no pullbacks, there's no liquidity. But like I said earlier, for me, I don't personally, especially with Eurodollar, weigh a massive importance with that, especially as this was a sweep zone, right? This is a clear structural low that led to a nice break of structure. Price came down, grabbed the orders below that low, mitigated a nice flip and continued up. So for me, this becomes a pretty high probability area and it's still within that M15 demand level as well. So I then set my entry order here. I believe I'm still using a 2 pips up. Yeah, that's more than fine above the EQ. So it was somewhere around here like this, and I set my order, and I'm more than happy to take a loss in this area. So cool, order is set. Let's sit on my hands now and see what happens and watch price action. Now we did have a pullback and we did continue up. So I guess you could ask yourself, right, well, should we follow order flow? And now should we move our order up to here? You can do that. For me personally, no, I don't want to chase price because this has not mitigated anything, right? This low has not mitigated anything to refine. Yes, it's mitigated the prior demand range. So what do I mean by that? Right, well, this whole sell to buy is a range, right? This level here, this is a larger range, right? If you go on the M3, that'd probably be a candle, right? This is demand, price has come into the demand range and it's continued up. But for me personally, I'm chasing price too much at that point, okay? There's way too much value down here. So I'm just being patient. If it goes without me, it goes without me, right? I want to get in at value. I want to stick to the high probability stuff. So just chilling now, just waiting. Okay, zoom out a little bit. Price is doing this, right? So again, it could come into here and I could miss it. That's absolutely fine. I'll reassess if and when that happens. But I've just been burnt way too many times doing that. It's okay. So now price is coming in. I'm very happy. Let's see if we can get triggered, right? Just waiting for my price to be triggered. Chilling. I thought this was just going to be inducement, right? If you zoom in, see how we didn't quite touch the zone. Okay, cool. Let's see what's going to happen. Just chilling, just chilling, just chilling. Right now at this point, I'm thinking, okay, we've had a very, very solid move away, right? This is a decent move away. A lot of orders have been filled and we have now come into M1 supply here. So at this point, I'm thinking, I don't really want to keep my order open because, you know, on a different broker feed that potentially hit. So I looked at my MT4 and on my MT4, this didn't just tap it, but actually it tapped in quite deep and then moved away. And now we're into M1 supply and excuse me, we have not had a bullish M1 change of character yet. Right, because this high would have to go. So at this point, I think I waited a little bit longer. The price was messing around like this, and then I pulled the order. I just didn't like it because it was mitigated on my broker feed. We've rejected supply. We failed to have that bullish M1 change of character again, and I just didn't like it. And I was also aware, right, we have this unmitigated pivot below. So at this point, what I did is I said to myself, if price comes down into this level and we do actually get a true mitigation, I'm going to play a confirmation entry from here and I'll be happy to get involved. I don't need to see, a picture perfect V-shaped liquidation, blah, 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 because essentially that I would view as a liquidation anyway, right? If price came down and took out that low, I just literally want to get, if I see price come in and shift, I'm going to get in, right? That's all I want to see is I just want to see price confirm this level, okay? Or come deeper into the zone and again, give us our entry model and I'll look to get involved, right? Or if price then was to continue up from here, right, and break this high, what would that do? That would give us another M15 zone over here. And then again, I would just follow price. I'd wait for price to come back in and then I'd do that, right? That's essentially what I'm thinking at this time. Now, if you left your limit order on here, that's absolutely fine as well, okay? That would be part of my plan as well. Just for the reasons I've outlined, I could see it was very mitigated. I didn't like then that it had hit supply. It was kind of chopping around, getting towards the end of the session as well. I was kind of happy to just leave it, okay? So chopping and chopping and chopping. So let's see what happens next. Speed this up a little bit. Okay, so now we come into this level. So I'm literally sitting here and going, okay, we've tapped in. We've definitely tapped in now, especially on TradingView. As soon as we get an M1 change of character, I'll be looking to get involved. So at this point, because we have now taken this low here, right? We've broken this low. What do we do for that internal structure? We look for the nearest candle that failed to break the prior candle's low, which we can see was here, right? So that is the high now that I need to see go for the M1 shock to give us our M1 CE, right? So let's play this forward. Okay, boom, and then we've done through. Right, so we haven't got it from this level. If you set an entry order here, I still think that's a great trade. If you took a loss there, do not overthink that. That'd be one that would be more than valid in my plan. Right, so now it's traded through. We can delete it. This will still be the change of character line that I need to see go. But I'm also aware we have this unmitigated extreme pivot candle here. Right, so let's see what happens. This price comes in. Boom. Okay, so it's also ask yourself as well, how does price react to things? Because that's often, an unspoken confluence we talk about, but we've tried to list that in the entry model with the term V-shape, right? We've come in, we've built some, almost larger big equals here. So I'm just going to draw that on, right? So we have what? We have a liquidation, clear liquidation, higher time frame mitigation, the M15 zone, also the M1 refined mitigation, which just adds a bit more confluence, V-shape, change of character. So now where do we enter? So remember, change of character tells us when to enter. It's just a signal that structure is shifting in our favor. It's a bit of a confirmation for our higher time frame level. So change of character helps us time when to enter. The flip helps us to kind of show where we can enter, right? So usually we have two options. Usually we can either go, all right, we're going to get on the extreme, or we're going to look for the flip. In this case, it's really, really easy. And this is when I love it, because there's only one zone we can enter on. Why? Because the extreme zone here is already mitigated, right? Clear mitigation. Yes, it could come for the wick or whatever, but for me, that is mitigated. So now we had the flip, is the only unmitigated zone left to trade from, right? You can see how price came into supply, failed to put a lower low and broke and closed above. So that's your failed reaction line there. There's your change of character. So yes, the flip did not sweep liquidity because it was one pullback and one up movement, but there is no extreme. The flip is the extreme. It's the unmitigated extreme, right? Because this is already done. So I know I had a few questions on that. So you can either take the whole range, especially as it's pretty much the same, it's barely bigger than just the pick of a candle, right? The whole reaction, or you can refine it to the candle, right? It doesn't make too much of a difference in this case, because either way, you're going to want your stop loss to cover this low here. All right, so what does a fixed 2-pip stop loss give us? Above the EQ, and then we can cover the stops. That's perfect. So now, for me, just talking about the M15 and the M1, let's forget about the 4 on a daily, but this is pretty much as picture perfect as it gets, right? We have, remember, come into an M15 extreme, a very, very strong low, right? Swept a big pool of liquidity, big aggressive movement away, mitigated some demand here, nice straight, big, strong move. We've swept a low behind there. We had some nice equal lows formed during the end of Asia and Frankfurt, which we then liquidated those as well. Nice aggressive retrace, giving us our bullish M15 change of character. Order flow at this point has then shifted clearly on our side, right? You can see this big move, clearly wiping out all of the supply, but most importantly, or specifically, I should say, this nearest supply range. So now demand should be taking in control. Obviously, we don't get true confirmation of that until this demand level holds. But once that first range goes, generally demand's going to hold for at least another, couple of or a few ranges, right? So that's what I'm saying. Even if you just want to enter on the M15, boom, you don't even have to mess around in M1. Set your entry order in here, like you would have been entered pretty much around the EQ. That's 10R to about here, right? So Boom. That's everything I want to see on the M15. M1, obviously, there's a bit more to it. It's a bit trickier. That's why if you're new, use the M5 even, or just enter on the M1. Or the whole time, you literally could have just set a limit on this candle, right? But we want to be a little bit more refined. Boom. We've come in. If you took a loss here, no biggie. Stay focused and look for the next opportunity. Liquidation, mitigation, chop, flip. Cool. I'm going to set my entry order on this all day long. Nice quick pullback, which is what I love, right? I much prefer it when you get that initial shock and it pulls back in and goes. Why? Otherwise, price can then go a long way up. It can start to potentially mitigate supply, and then you're trading essentially against this, right? And it can be not as ideal, right? But even if I had done that, for me personally, I still probably would have left my order, definitely, just because of the whole area. I'm more than willing to get involved, right? The risk reward is amazing from this level. Now, yeah, I remember I was super lucky. It literally tagged me into the micro pip, and that's the beauty of having a raw spread account. So you may have struggled a little bit if you do have wide spreads. Now, I was in this trade. Risk was partialed out at 4R to essentially break even my trade, right, to remove my initial risk. And this is where I actually messed up a little bit, because my trade plan says I can scale in once I have removed risk from all open positions. So at this point, I have no net risk on the table. So you can either look to scale in, or if you missed this initial move, whether it be you didn't want to take it or it didn't tag you in, right? This is where you need to be on the ball. Forget about emotions. Don't get frustrated. Don't start moaning in the Discord or whatever, right? Stay focused, deep breath, keep your heart rate down, and just keep looking at price and follow the money. What do we have? Super clear textbook double confirmation entry, right? Just keep following the money, right? Real simple trade. Right, the extreme and mitigated, there's no flip within here, and that can be your additional scaling or first entry for the double confirmation entry, right? There you go, nice simple entry, boom. Okay, let's fast forward a little bit. Do you get tagged in? I can't even remember now. Okay, so 2 pip stop loss. Let's see, let's drag it across. So it just touches the distal belly, yet you probably wouldn't have got tagged with a 2 pip stop loss, okay? So, but either way, I should have set an entry limit on it. So it's like a missed order I should have put on. It's not really a missed trade per se, because it didn't meet my plan, because I use fixed 2 pip stop losses still at this current time of recording. But I should have put the order on right either way, because it easily could have tagged me in. Cool, so that's the trade. So in terms of management, I know I touched on this briefly earlier, but this depends, right? Again, I don't want to dive too deep in it, because management, there's so many possibilities and variabilities. But my main advice with you is that you should be, or I would advise that you be 100% mechanical on the way that you remove your initial risk. So what do I mean by that? Well, I mean, when you're in a position, basically, how are you going to get to break even? And in my opinion, that one rule should be 100% mechanical. So for me, obviously, at the moment, it's partialing at 4R to remove my initial risk. Others of you will move to break even once price breaks the high that initiated the pullback to your entry. Okay, so this is the high here that initiated that pullback to your entry. Once that high goes, then you would trail your stop loss to break even. Okay, that's a mechanical way of doing it as well, right? So as long as you have that, then okay, if how you decide to push out the rest of your volume and where you want to target, blah blah blah. If that's a little bit discretionary, I'm okay with that. But for that first initial moment, for me, that's where people can really mess up their edge, and it's where I struggle with for a long time. Because let's say this is nice and easy, you get tagged in and it rockets, it's super easy. But it can be very often times where price can come up, it can mess around, and it can come back with a lot of potential. People cancel orders, or you can get tagged in and then it chops around and you don't quite get to 4R, and then it starts shooting down, and then you see it like that, and then you quickly run into T4 and you cancel the trade, or you close the position because you get fearful, you don't want to take a loss, and then all price has done is come to mitigate more demand, and it flies off. Then you're kicking yourself, and you're frustrated, and then you make more mistakes, or you chase price, blah 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 blah. So that's why once you set your limit order, literally in your head say, okay, I've already lost -1R. That I've paid that -1R to find out if that trade is going to play out, and you are not allowed to touch the trade until that first mechanical criteria has been met to remove your risk. Whether that's trading to break even once you get that first sort of minor breaker structure, or whether you're partialing, right? It should just all be automated almost, right? Anyway, I wanted to drive that point home. But in terms of technical targets, you can either use fixed R. So for me, whenever I get around 10R, that's just works for me. I pretty much bank 90% of my volume that is gone off at that point. Of course, if you want to be a bit more technical, that would be your week M15 internal high to target. Another great place to take profits. or we can look at other targets. So extreme supply up here. So we know that this is a weak high. Why is this a weak high? Well, at the moment it's failed to take out the low, right? Demand's starting to take control. So now we can anticipate that this high is going to go. And if you want to be really ambitious, like I was saying, when you're trying to get really tricky with your analysis, this was that weak 4-hour internal high that failed to take out the swing low. So potentially now we can target that and beyond up to daily premium. But like I also said right at the start, and this video is pretty long, so you're more than forgiven for forgetting. Even when everything seems to align at this point, like I was very confident we're probably going to see a move like that. Ultimately, you were trading against the overall strong bearish 4-hour daily trend. But even that, we are in one big range. So as soon as price gets to around the middle of that range, pay yourself, right? That would be my advice until you are consistent. Do not be swinging for these 15, 20, 30, 40R trades with full volume. If you get anywhere between 5 and 10R, ideally 10R, that's a great trade. Pay yourself, get consistency, and then earn the right to swing higher volume for those larger trades. Of course, you can ignore me, take everything I say with a pinch of salt, but that would be my advice, okay? So yeah, in summary, that's basically very, very high probability trade in my opinion, about as clean as it gets. Yes, a little bit tricky initially if you took a loss in here, but just stay focused, and then that's literally the super, super, super clean entry model, right? Liquidation, mitigation, V-shape, chock, flip. There's nowhere to enter other than this candle here. So it should be, zero hesitation, and then boom, you're in a lovely trade. That's pretty damn easy to manage on the psychology as well. So this video is already way longer than I want it to be. So I'm going to try and fast forward through price action a little bit. Yeah, essentially just however you want to manage it, that's going to be down to you. But you can see we start to come into following the series of mitigations, right? We're starting to get that bullish order flow, which is what we expect. All right, coming into here again, look for longs. What time was this? Around sort of the end of tail end of the London New York crossover, and start to target these levels where you can potentially look for hedges at the top of the range. We'll see a bit of supply within here if you want to look for a bit more advanced shorts, but focus on the pro trend stuff and buying at the bottom of the range, right? This is really what I would say you want to be focusing on until you're consistent. Again, right? Yes, we've come up to the top of the range and you could look for shorts, but what is the but what's the high probability position? Waiting for price to come down to here. Right, you can see these larger internal swings. We know that this is our bullish swing structure here, right? This high and this low here. This is obviously the most ideal place to get involved. We've then had a nice move up, an internal swing back, right? That internal movement up. So where's the easiest trade going to be? Is it trying to short from the top of here? Yes, you can do that, but no, this is going to be the best trade we want to wait for. So if we can highlight that on, I believe this was coming into Tuesday, and I know that this is the level I want to wait for, let's see what happens with price action as I play this forward. Chopping around in here. This is where people are forcing trades, they're getting chopped around, blah, 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 right? Like we came into, I think this was the start of London actually on the Tuesday. Yeah, it was. And we had, just want to talk through this quickly. Again, this is not to say you can't and shouldn't trade this. It's just, I'm just saying if you want to get consistent, or if you want a kind of more stress-free life, or you want that higher strike rate, focus on the pro M15 trend trades when the internal structure is clearly aligned. You're buying the discount at the bottom of the range. This is the easy trade. This is the easy trade. This is the easy trade. Right, or even setting your limit on here, right? The orange circles are the easy trades. Again, I don't like the word easy, but the better trades, right? The ones we want to be focusing on. Can you trade this? Yes. Can you trade this from over here? Of course. Can you trade this? Yes. But this is it. Likewise, right? This movement here, yes, there's supply at the top of the range. We can see a bit of supply chains forming, but what did this supply level break? It didn't break any structure. All of these candles broke the prior candles high, so it's one straight movement. So yes, we get a nice corrective pullback through Asia, and we come in here and reject it. We have that internal change of character, and you can trade these absolutely fine. If you're a bit more advanced, 100% you can look at those trades. But again, if you're trying to get consistent, I'm going to keep driving this home. I know I'm probably boring you. Just be patient. Wait for this trade here. You don't have to be trying to get involved in all these trades. Let the market come to you. Be patient. Bring in another pair if you want to, if you feel you want to be a bit more active or you struggle with patience. I just want to drive it home, right? This is the easy trade to wait for. Right, we can see bearish order flow. Once we come in and mitigate the extreme, this is the trade, right? This is where we want to be getting in long. Again, you don't have to swing for the fences. Pay yourself. Excuse me. See, unfortunately, this came into here during Asia. Obviously, so I'm just going to take a sip of water. The majority of us aren't going to be trading during then, as we know the London and New York sessions are most ideal. Okay, and then we started to move away. So I do want to talk about this briefly, and then I'll start to wrap up the video. So we're just going to bring it to the London session of, I believe this was Wednesday. Yeah, it should be Wednesday. So sort of pre-Frankfurt here. So at this point, right, again, yes, we could, there's trades within here. There was shorts within here, there was shorts within here on the Tuesday and here. There was even potentially, well, actually there wasn't a valid long for me because it didn't even hit that sell to buy candle, it just missed it. So me personally, it's not valid. So you can just chilling and go, right, this is where I want to get involved. And again, don't turn your nose up at what? At M15 entries, okay, from these levels. But yeah, hopefully you can see why, right? We've come into the extreme, movement away, buy. Want to buy from the extreme demand. Another movement away, where do we want to buy from? We want to buy from the extreme demand, right? We're following those lows. This is the best value to be getting in long. Of course, you don't just have to jump in. You can wait for those M15 confirmations from here. So we came in super correctively. Now, what I didn't like about this, as you can see, we had one straight movement down. All of those candles broke the prior candles low. And then we had this liquidity pool sitting here. Because typically what you want to see is when price comes in, right, we want to see that sweep where it gets swept during Frankfurt, then we get the movement, and then that is picture perfect. Very similar to what we saw here. So usually lows that are going to go on to go and do something, to go and break highs, like strong lows, they don't form like this. They don't form very, very correctively, without a sweep, like a kind of that rounded bottom. Usually they're like this, right? Sharp movement, sharp movement, sharp movement, sharp movement. So although, I didn't have a lot of confidence that was going to be the move to go and break that high, am I going to set my hands and not trade it? No, there can still be very, very much tradable moves. And there's plenty of risk to reward, even if you just target up towards this supply here, okay? Because whilst, I know this is a little bit confusing, maybe I'll mark up the highs so you can kind of see what I mean, right? So if we're looking at kind of these larger internal swings, right, we're between here. We know this is our swing structure, so don't forget about that. But if we're looking at the internal swings, we can see we've had a nice corrective move down into here. Now we want to start looking for buys to try and potentially anticipate that movement there. But we also have to be aware, if you're looking in for longs, we also have the internal of the internal structure that's like this. And potentially it could come up into here, right? And continue to sell off, take out these lows before we get the move. So this is where structure can get complex when we're ranging. So don't worry if that's a little bit overwhelming. And that's why I'm saying focus on the internal structure when it's aligned with the swing structure and just look to buy from those demands near the bottom of the range. Right, so coming into Frankfurt on the Wednesday, it was around here. We can start to see that we've got some sort of bullish order flow forming, right, with essentially this demand chain. And I'm personally happy to buy in this, but whilst also being aware in the back of my mind that we might come down to take out these lows, okay? And then we have this demand range here, okay? So this essentially where I was looking to get long and look to buy. So let's drop down to the 1 minute chart and see what is going on. So we know anywhere within here, if I see the M1 entry model, I'm happy to set it up, but what can increase our confidence and strike rate with execution is we can look for refined zones. So we can start to follow this M1 demand chain as well, and we can follow all the mitigations to see, where is the unmitigated level that we can look to trade from. All right, oops, all of this is mitigated. So we got that level, and now this level I didn't mark on, but obviously now I have the benefit of hindsight, so I'm going to mark it on now anyway, but I didn't have it marked on in the live market. So I had this one marked on and essentially just waiting for price to come to this, but as we'll now see in a second, we have, I tell you what, let's kind of do it more with my mindset of how I kind of approach it, because I think you'll probably get more value from that, right? So quickly, very, very quickly, coming into Frankfurt, what's my trade thesis? Well, I want to target this weekend 15 swing high, right, with the 4 hour high as well, but let's just keep it simple with M15. The internal structure is clearly switched bullish, right? We've had these big movements, and now we're trading between this internal range, right, within the larger swing range. The swing and internal structure is aligned. We've pulled back reasonably correctively, right, compared to that nice big impulsive movement up into our level, right, between this high and this high, and we've come into here. Now, ideally, we would have seen a nice big sweep, but nonetheless, let's react to liquidity rather than necessarily anticipate that it has to be swept. Just going to do that to show it hasn't been swept yet. Okay. We have had that sort of bullish internal change of character, right? It's not the true troc because that's the internal low, like I said, and that's the internal high at the moment, but we can still read it, right? That's a bit of a bullish signal from a structure perspective that we're kind of moving away, and we're seeing those little series of higher highs and higher lows, and we have a bit of a demand chain. So if price comes into here, following the momentum, following the volume that you can start to see is kicking in, I'm happy to start to look for that movement there, but to potentially anticipate that this supply chain is weak because it's failed to take out this internal low here, and potentially price is going to break up through that, right? That's hopefully reasonably sort of simple thesis of how you can, know what your intentions are and what direction you're going to be trading for the session. So again, you could just set your, your M15 entry. Don't turn your nose up at that. That's only 3 pips. It looks massive. It's 3 pips, right? So you get 15 pips. You only have to catch 15 pips and you got a 5-hour trade, right? Quick maths. Just have to double check I hadn't got that wrong, but yeah, still got some basic mental arithmetic skills. I'm glad to see. Right, let's wrap this up because I know this is a bit long now, but I think this is pretty, hopefully you guys are taking value from it. Let me know if not. So yeah, so waiting for price to come into this level, and I'm going to personally wait for a confirmation entry. But again, you're more than within your rights to set just set a limit on within here, right? Just following that order flow, because really there's nothing really unmitigated below here. So it makes more than enough sense to do that. So as price comes in, let's see. So at this point, let me just double check the M15. How's the M15 looking at? Right, so you can see because the M15 still, we have this unmitigated range, this is the last one, and there's been no pullback on M15, right? All of these candles break the price candles high. This is where I don't chase price. A lot of people kind of do this on continuations. I'm more than happy to wait for price to eventually come back to here. I want to be trading from at least some form of M15 POI, okay? So this is why I'm just patient. Let price do its thing. I'm not getting involved up here or here. I'm happy to let it go if it does that, all right? So let's be patient. Sorry, I have real bad OCD, so I have to rein that in. Cool. So Frankfurt, see at this point as well, like Frankfurt hasn't even opened. This is literally quarter to, let's bring it to Frankfurt. So let's say we're being super strict. I'm not going to trade until 7 a.m. BST. So we come down, we suck this liquidity here. Again, let's have a super quick look at the M15. How does it look? We've pulled back. Let's just skip ahead a little bit because obviously we hadn't mitigated that range, but there's nothing there, right? So I'm going to be patient. I don't want to trade until this blue box is mitigated. So I'm patient. Not going to chase price. Just going to leave it alone, right? Some people take early losses here. Potentially that could work another day, but it's just been about being disciplined. I'm going to wait for this M15 range to be hit because it hasn't even hit, if that had hit the top of the range, maybe it's a bit of a different story, right? If that was the top of the range here, but it hasn't. So at least at a minimum, I want to see it hit the range. Ideally, to the refined M15 candle. So now we're coming to the range. Now I'm sitting up in my chair. So ideally, I want to see this zone here. But if we were starting to come in, right, and we get our entry model, we get our chalk, I'm more than happy to take that as well. So that's literally what I'm waiting for is an M1 change of character. So at this point, this would be the M1 high that needs to go for me to at least get, my very first piece of non-negotiable criteria that I need no matter what. We continue down, and then we get a bullish chalk. Okay, so what has happened? Well, we haven't hit this level. Okay, we still could come back. So I'm aware of that. But what has happened? Well, we have had a bullish change of character. Liquidation. All of these relatively equal lows. Liquidation. Higher time frame mitigation. Okay. V-shaped reaction and a change of character. And the V-shaped reaction is key. Obviously session timing as well. We're heading deep into Frankfurt. Look left. What can we refine it? We don't have to. Again, as long as it just hits the blue box for me, the M15, I'm more than happy. But we can still justify potentially there's an M1 zone here. Right. This sell to buy wick. Usually I don't pay too much attention to them, but if price reacts away and we can see that it was this flip here, then again, that gives me a little bit more confidence, right? I much prefer single actual candles than wicks, but still it's there. But more importantly, we've had that liquidation, M15 mitigation, V-shaped reaction and shock. Super, super simple setup for me. So now we look to enter on this candle. All right. And then I set a 2-pip stop order, which was above the EQ. So nice trade there. And then let's see what happens. So just being patient, and then we start to move away. Okay, so what ended up happening, we can see is we built some nice inducement with this low. Price then came down and swept that liquidity and mitigated the distal of the M1 zone, but didn't quite tag me in. So again, not a missed trade because it didn't meet my rules, right? It didn't meet that, but you need to journal this because if this is continually keeps happening, then you go, okay, maybe I need to adjust my rules, right? And maybe I need to make a bigger stop loss, or maybe I need to enter the distal, blah, blah, blah. But for me, it's not a missed trade. Yes, it's a little bit frustrating, but follow price. Don't miss the next opportunity. Now, when you see a big move like this in the M1, right, without even looking at M15, you can guess that there's probably now going to be a new M15 range. So let's take a look. Oops, that's not what I wanted to do. Cool, so you can see, right? What did we do? We came in, we were patient, we let price mitigate that range, wipe out all of those early longs, people trying to chase on the M1, not looking at that structure and high time frame analysis. So we come into here, right? Whether you refine it to inside bar, whatever, doesn't really matter, right? We've pulled back and we've continued up. So now what do we have? Now we have another M15 demand range to work with, right? Whether you want to take the entire range like this, whether you just want to refine it down to that candle, but still include the wick, it's up to you, right? The only thing with this, that's not ideal, is we're getting further and further up in the move, right? We're trying to buy, and essentially, obviously, I've refined the supply to the wick, but I am still aware in the back of my mind that that's the true M15 pivot candle. It's a massive zone, so obviously we can look to trade deeper within that. And ultimately, we're expecting this to be weak, right? Because we're trading in line with swing structure, we're trading in line for the internal low, and we are expecting that move. So this depends on how aggressive or conservative you want to be. So for me personally, even though you'll see in my charts I have it refined like that, I'm still aware in the back of my mind that we're now in M15 supply. If we mark out the premium and discount of the actual swing range, right, we're now going much more higher up into the premium. You see, this was actually in the discount, the one the example we're just looking at. So again, just want to make you guys aware of that. It's going to depend on what you want to do, and then the decisions you're going to have to make as a trader overall, what you want to do. For me personally, I'm happy to be reasonably aggressive, especially if I think, you know, on the M15, it's kind of done everything it needs to do. It's pulled back down to the extreme initially on Monday. We've had nice sustained bullish higher highs and higher lows on the internal structure. We've come all the way down into this extreme level here. So I had a lot of confidence that potentially we're going to now get that movement. We're following good momentum. I would still be happy to try and push this up into here, right? So for me personally, I was happy to keep looking at price. So again, I'll try and do this a bit more quicker. But what am I waiting for? I'm waiting for an M1 entry within this level. We can mark out the extreme like this. Now, me personally, I believe, if memory serves me correct, I did actually set an order on this extreme just because I'd seen everything I need to see: sustained order flow, a sweep of liquidity into the mitigation, you know, continued essentially M1 demand chain. You know, I saw this low as having to hold if it was going to continue. And basically, my view was I'm happy to leave my order on here until price mitigates this. Like if price had continued up and then started coming down, I wouldn't want to leave my order on here because now supply has been reached, right? So it's a lot less likely that this may hold. So in that case, you could still look for like a confirmation entry, right, if you wanted to, etc., etc. And then obviously there's other levels as well you need to be aware of or can be aware of, right? Where's the next level? Unmitigated level, this level here. That obviously led to a break of structure. How else can we justify it? Is it a flip? Yep, it flipped this level here, right? You can see the reaction. So obviously the top of the reaction to the base of the reaction is the flip, and obviously the top of it was mitigated, but I would still be more than happy to trade from a pivot, right? All those things considered. So let's bring this forward and see what happens. So we came into that flip, but because it's a decisional one, it didn't sweep. What I would want to do really is trade a confirmation entry from it. So I'd want price to come in, right, and then give us that, give us that C, and then I'd take something like that. But you can see at that point when it came in, where is the chalk that I need? If I want to play that confirmation entry, it's all the way up here. So that's why I wasn't bothered. I left my order on down here. And then, yeah, then it started messing around and it broke all of here. And I think at this point, I cancelled my order once we started messing around. Yeah, especially at this point here, I then left my order. It was all just getting very choppy and very messy. I know one or two of you was looking at a trade within here. Once you got that break, I think it took along within here, but for me, that's just way too aggressive, a bit too messy. You know, it was either take the flip without the speed within here, or leave your order within here and leave it. And then I think it was getting towards the end of the session. I can't remember if there was news coming up as well. And yeah, and then we shot up into the supply. So at this point, my session is done, but that's how I viewed it. So hopefully you guys took some value from that. And I'll just quickly end the M15 and may as well bring it to current price action and essentially turn this into a full sort of weekly recap. It's only meant to be a quick trade recap, but here we are nonetheless. Anyway, hope you guys took value from it. So at this point, I was pretty confident the supply chain was going to get broken, and then there we go, we pushed up through it, so we had broken at this point, so the supply chain has now failed. But what happens next? Well, you can look to, like we just did, you know, continue to look to trade from these ranges. If you kind of actually want to change it to the last unmitigated bit, it would be this wick here, because it's a little bit messy. Now, I had a few questions for this. Do you continue, now the supply chain's failed, to continue to follow the order flow and buy from here? Yes, you can do that, but for me, you're coming into the London low now before New York. You're buying in a premium, but more importantly, again, zoom out, and you know, although we have nice bullish swing structure, if you map it the same way as me, and we had to sustain higher highs and higher lows, and we came back in, you have to remember the environment, and it's very easy to forget sometimes when you're zoomed in, that ultimately we are in the middle of a big sideways range, and even more zoomed out, look, we have been selling off aggressively basically all year. But to be fair, let me rein it a bit. More importantly, we're in the middle of the range. You're buying in the premium of the current swing range. It's not ideal. If you've missed the trade down here and you've missed these, my advice is don't start forcing it in here and getting really aggressive. You know, maybe if you're running decent after the day, maybe you want to risk a little bit of your profits. That's fine. But this is not the trade to take, in my opinion. That's where I'm just being a bit more patient and exercising caution. Okay. And this is why. This is a perfect example of why. Something in the world, you take a loss, of course, but this is why. So yes, the supply chain had failed, but what's happened is we've essentially swept that internal range liquidity, and we've had an aggressive V-shape retrace, I should say, during the London low. So now what I would say at this point, okay, is the demand chain has now failed, right? The nearest, I'm just going to make it a little bit easier to read, right? See, the nearest demand chain has now failed. So yes, the supply chain failed, but now also we've had the sweep of liquidity, and wait, it hasn't failed just yet. I would ideally want to see this box completely go, right? That last pullback. Even if you draw it to that wick, if you want it to be a little bit more accurate, right? It's clearly failed now, right? There's kind of no if, buts, or maybes about that. So now coming into New York, this is where I was like, I don't want to buy. I think there was big news coming up as well. I can't remember. I think there was CPI maybe, which you definitely don't want to trade through. Yeah, I'm pretty sure it was CPI. We do have this flip, okay? Came into this demand wick here. Right, price came in, reacted, mitigated the extreme, and then pushed down. So all else things considered, you could look to take shorts from here to follow that move, but I believe there was CPI coming in. And this is where, so let's, the kind of real mini lesson from this is when you see that and you see that move, and now you see that the nearest demand has failed, right, the nearest demand range has failed. Now we can hypothesize that this low is now weak. Why? Because it's failed to take out that high. Generally, what you should see is these demand ranges should hold until it goes on to take out that high. But because it's tried and it's failed to do that, and now that demand's gone, generally now you'll see supply ranges hold until this low goes, especially when the low formed that way, right? Really slow rounded, no super liquidity, nice sell side liquidity to now target, and it's pretty likely that move's going to go. Do I want to sell here? Not so much, mainly because of CPI. Do I want to be buying in here? Definitely not. So this is where, again, I'm just patient on my hands. If you've missed the easy trades during the week, like I said, not easy, but the clear trades, the high probability trades, these down here, these are the ones, right? The ones that we've spent time going through. Here, here, and here. And then obviously it wasn't ideal when it first came in during Asia, but what we can do with it starts to move away. That's the easy trade. There was no tag on this one, but they're the high probability ones. So dig into this one around the start of the London session on 11th of May. I don't think there was an entry here. What time? Yeah, this was kind of around, not when I'd be looking to trade. I can't remember if there was one entry there or not, but this is the one right on Monday. These are the types of trades you want to be focusing on when we're in market conditions like this, right? Stay away from this until you're consistent. Stay away from this until you're consistent, right? Don't be chasing price. Let price come down to you when internal structure is aligned with swing structure. Buy pro trend and buy in well-placed areas. Okay. Yes, it requires a little bit of patience at times, but that's how you do it. That's professional trading, in my humble opinion. So anyway, I'm going to just play through price action now before this turns into a 4-hour monologue of my boring voice. So yeah, we had a lot of volatility with CPI. It ended up sweeping obviously this week low. Interestingly, it failed to close below that kind of larger internal low that we had here. So we had a bit of a sweep of liquidity. Then classic news. Then we took the high and the low, so just trapping everyone. And then coming into London today, which is Thursday, basically just stuck within this box. Which when that's happened, when it's taken the low and taken the high, there's no clear intentions. I'm happy to just not trade that and wait for price to break out of it either way. Again, at this point, price is super messy. For me, there's no real clear intentions at this point. Obviously, the high times are very, very bearish. So although we can still say that this should be a strong low that should be protected, all we've had is one bullish M15 boss at that point. Really, you want at least two bosses to give you a lot more confirmation that potentially we're going to get the higher time frame pullback. Why is that? Well, the second boss, remember, if we get that, then confirms us a higher low, right? Because on the M15, we only had a higher high. One boss only gives us a higher high, but it's not until we get the second boss over here that we can then look back and know where the higher low is, right? So it's the two bosses that give us a lot more confirmation of that higher time frame having a much deeper pullback. So coming into today, when we're taking a low, we're taking a high, it was just super choppy now. Right, there's no clear sort of nice internal structure like we had here on Monday, Tuesday, Wednesday, and Wednesday. Now it's just messy. This is why I said to you guys, like, I don't really like any of it. I'm just going to wait for much clearer intentions. I think coming into Frankfurt, we just sold off. Yeah, so we took this low here, right? So at that point, the swing low still hadn't been broken. Do I want to buy from here? You can do, but remember what I said is we want to see not just a chalk, but we want to see the nearest supply range go. So whether you want to kind of draw it like that, but basically I want to see this go, this high here. I want to see that high go to give me a lot more confidence that we're going to go, as well as the chalk I believe would be here, right? And this way you can save yourself a hell of a lot of losses when you're in environments like this. And if we got that bullish chalk, but more importantly the supply range fell, okay, now order flow has switched bullish again, right? Because it's clearly been bearish all the way through Asia. See the intentions coming in through Frankfurt. We're selling off. There's no need to be first in with these conditions. If we got that, okay, now we can look for the buys and we can start to play the range again. Okay, that's what I would be looking for. Can you look for sells? Yes, you can. Is it high probability? that's debatable, right? It's all relative. I would say on the whole, the easy answer is no. Why? Because you are selling counter to the M15 trend after, you know, the extreme low being rejected, and more importantly, deep in the discount, right? If we take the discount and the premium, right, you're not selling at good value. Can you do it? Can it work out? Of course. And this is where a level I was looking at, right? This supply level, just quickly kind of draw on the supply chain so you can make sense of the order flow throughout Asia. We can clearly see, you know, there's a series of mitigations here. So if price came into that level, I was, you know, loosely considering taking a potential short if I got a nice M1 entry, because there should be enough risk reward even just targeting that low, but ideally trying to anticipate that, you know, the overall hard time frame move is going to take over. In the end, I believe we came off this kind of pretty insignificant buy to sell wick, which obviously makes sense. Just draw it across. Obviously you can see it with the benefit of hindsight, but really in reality we're just coming into this buy to sell range, right? And we've tapped into that and then sold off and dumped. So yeah, that pretty much brings us to current price action. Just play it forward. So hopefully you guys took some value from that. Obviously the hard time frames we're just dumping at the moment. Pulled up, nice pullback to there. Paying quick continuation. So obviously when we're very, very aggressive as well, you can continue to, you know, we've had that big 4-hour and daily break of structure, so we have to have in the back of our minds that we're at some point we're going to get a 4-hour and daily pullback. But until the M15 starts to at least give a chock or not, when momentums are strong, you can take aggressive sells, but just be a bit more aggressive with your management, right? You can't get in here and hold a trade the same way as in if you get in a short at the top, right? Because, you know, you're not going to be able to ride out any pullbacks. So just be aggressive with your management there. But I'll leave it there before I rant on any longer. Hopefully you guys took some value from that. Watch this as many times as you need to. But the main lesson I want you guys to take away from it, you know, for all market conditions, but particularly when we're range bound and we're against the 4-hour and daily trend heavily, wait for the good stuff at the bottom of the ranges. And also you don't need to be first in, right? Wait for order flow to shift in your favor. Wait for that first supply range to fail. Boom, now you've got the confirmation. You don't have to chase price up here. You don't have to take those shorts to play the hedges. Just patiently wait for price to come into here. Again, don't have to chase price up. Don't have to take the sells. Just look at the clearer, larger internal swings. Know where you are. Wait for price to come into here, right? You don't have to get involved in all this if you don't need to. Be consistent, be patient, and then earn the right to start to play around with these more advanced setups, okay? Cool. Right. Hope you guys have a good end to whatever morning, afternoon, evening, wherever you are in the world or whenever you're watching it. And I'll see you next one. Cheers, guys and girls.